Poet Technologies, $POET. 3 things you must see before buying. Welcome back to Smart Stock. Sam, the channel that cuts through Wall Street noise to find you the real story hiding behind the ticker symbol. Today, we are doing a full deep dive that I'm calling Poet Technologies, ticker POET. 3 things you must see before investing, because by the time this video ends, you will understand exactly why those 3 things matter more than almost anything else in this entire story. Here's the setup in a nutshell. We've got short sellers screaming fraud. We've got a stack of class action lawsuits piling up by the week. We've got a shattered, multi-million-dollar partnership with one of the biggest names in semiconductors. And yet, at the very same moment, some of the most ruthless, calculating quantitative hedge funds on the planet are quietly scooping up millions of shares like absolutely nothing happened. So which is it? Is POET a ticking time bomb, seconds from detonating, or is it the most heavily discounted artificial intelligence infrastructure play hiding in plain sight? Could this actually be the kind of beaten-down name that quietly multiplies for the handful of investors brave enough to step in right now? It's a thrilling thought, but stay skeptical with me, because the odds of any single stock pulling that off cleanly are always razor thin. We are going to tear apart the financials, the options chain, and the technical charts, and by the end, I'll hand you an exact, actionable trade plan for the week ahead. Fair warning, some of these numbers genuinely defy normal market logic, so let's get into it. Let's ground ourselves first in the raw pulse of this asset right now. POET is currently trading at $9.85, a brutal drop from where it sat just weeks ago. But the number that should really catch your attention is the 30-day annualized volatility, which is sitting at a staggering 186%. For comparison, a stable blue-chip tech stock typically moves around 20 to 30%. A reading this extreme means this stock is a violent roller coaster, driven almost entirely by raw emotion and headline shocks rather than steady fundamentals. And here's exactly why emotions are running this hot. POET currently carries an enterprise value of $1,430 million. Yet, in their most recent quarter, the company generated a microscopic $503,000 in revenue, not profit, gross revenue. So how exactly does a company making roughly $500,000 convince the market it deserves a billion-dollar-plus valuation? Stick with me, because we're about to uncover exactly who is propping that number up. To understand how we landed at this perilous valuation, we need to trace the exact anatomy of the crash that got us here. Just a short time ago, the hype around this name was deafening. POET soared to a 52-week high of $20.81, positioned as a critical player solving massive data center bottlenecks alongside semiconductor giant Marvell Technology. And then, almost without warning, the floor disappeared. The stock suffered a record-setting 47.3% single-day collapse. Why? Because Marvell abruptly canceled every purchase order it had on the books with POET. The root cause was a serious corporate governance failure when POET's own chief financial officer breached a strict non-disclosure agreement by publicly discussing details of the Marvell relationship. In an industry built on cutting-edge proprietary architecture, confidentiality is everything, and the instant that trust broke, the partner walked, dragging nearly half the company's market value down with it, landing the stock at today's $9.85. Now, a collapse that's severe doesn't just create losers and winners, it creates a violent tug-of-war between 2 completely opposing camps, and that war is still raging right now. On the bearish side, the bleeding didn't stop with Marvell's exit. Short seller Wolfpack Research smelled blood in the water and released a scathing report calling POET an obvious stock promotion, pointing out the company has generated barely $2.3 million in cumulative revenue since 2020. Right behind that report came a wave of class action lawsuits with a critical lead plaintiff deadline landing on June 29th, which, as of recording this, has just passed. But here's where this story gets genuinely complicated, because the bulls are not backing down either. To shield American investors from heavy tax exposure, POET is actively redomiciling its headquarters from Canada into the United States. More importantly, the company just closed a monstrous $400 million registered direct offering, handing them a massive war chest of cash. And to replace the void left by Marvel, they secured an initial $50 million purchase order from a company called Lumilens, an order with the potential to scale all the way up to $500 million over 5 years. Could that Lumilens relationship actually become bigger than Marvel ever was? It's an exciting thought, though realistically, the odds of that happening on schedule are extremely slim. When we strip away the spin from both the bulls and the bears, a fairly brutal mathematical reality emerges, and it should make any conservative value investor more than a little uneasy. POET is currently trading at a price-to-sales ratio north of 770 times. In the broader tech sector, a company trading at 10 to 15 times sales is already considered expensive. A multiple of 770 times sales means this stock is priced for flawless, decade-long perfection. Against that $500,000 revenue base, POET posted a $12.3 million net loss in just that single quarter. Now here's the one genuine saving grace, and frankly, the only reason this company isn't staring down bankruptcy today. That recent financing round left them with $429 million in cash sitting on the balance sheet. That secures their near-term survival and buys real runway. But make no mistake, the current $1,430 million valuation depends entirely on flawless future execution, not on anything happening today. With fundamentals distorted this badly, you'd logically expect Wall Street analysts to be downgrading this stock into oblivion. Instead, the consensus tells a strange and contradictory story. The institutional analyst rating actually sits at buy. But here's the catch. Their average price target is $8.36, which is meaningfully below where the stock is trading right now. Read that twice. Wall Street is calling this a buy while pricing it below the current market price. Fair value estimates across the analyst community swing wildly, ranging anywhere from 69 cents on the low end to $17.50 on the high end. That's not disagreement. That's a near total lack of consensus on what this company is actually worth. Meanwhile, retail traders on social platforms are largely ignoring the professionals altogether. Retail sentiment here is extremely bullish, with many viewing POET's optical interposer technology as essential infrastructure for next-generation AI data centers and treating this brutal sell-off as a once-in-a-cycle discount entry point. So retail is buying the dip aggressively, but who's actually holding the real weight behind the scenes? This is where things get genuinely fascinating. Despite the lawsuits, despite the broken NDA, despite that terrifying price-to-sales multiple, institutional smart money has been quietly building serious positions. On June 23, 2026, Jane Street Group, widely regarded as one of the most sophisticated quantitative trading firms on Earth, disclosed a massive 6.8% stake in POET, scooping up roughly 11.68 million shares. They are not alone at the table. Citadel Advisors added approximately 1.85 million shares. Tudor Investment grabbed nearly 1 million shares, and TrexQuant added more than 500,000 shares of its own. One important caveat, though, there is currently no recent insider buying reported anywhere in the filings. Management hasn't been buying their own dip, but these enormous quantitative funds clearly have been. Could a wave of insider buying suddenly appear next week and validate everything the institutions are doing? It's possible, but historically, that kind of perfectly timed coincidence is genuinely rare. Still, when funds of this caliber start building positions this large into a storm of bad headlines, it's rarely an accident, and it's exactly the kind of signal that deserves your attention even if it makes no sense on the surface. While the institutions quietly build their fortresses, the immediate technical picture is flashing bright red warning sirens. From a pure technical standpoint, The daily consensus reading on this stock is a resounding strong sell. The current price is trapped firmly beneath heavy overhead resistance, sitting below both its 50-day moving average of $10.80 and its 200-day moving average of $12.59. That is about as textbook a bearish trend structure as you can find. However, momentum indicators are telling a slightly different story, a story of exhaustion rather than collapse. The 14-day relative strength index sits at 45.16, which is essentially neutral, neither overbought nor oversold. It's consolidating, waiting for a catalyst to break it out of this holding pattern in either direction. The MACD reading of negative 0.32 simply reinforces that the immediate path of least resistance has, so far, been downward. Now, when a chart looks this technically and fundamentally broken, you would naturally assume short sellers are circling like sharks, ready to pile on. But the actual data tells a very different story, and this is genuinely surprising. If you're hoping for a massive, headline-grabbing short squeeze to rocket this stock back toward $20, I'd encourage you to abandon that thesis right now. Yes, 15.76% of the float is currently shorted, which equals roughly 27.17 million shares, a healthy chunk of short interest on paper. Off-exchange, or so-called dark pool, short volume is also dominating daily trading activity, averaging somewhere between 48% and 56%. But here's the number that actually matters most: the borrow fee. The cost to borrow shares of POET in order to short them is sitting at a microscopic 0.28% to 0.32%. In a genuine short squeeze environment, borrow fees explode into double or even triple digits because shares become nearly impossible to find. A borrow fee this low tells you shares are easily, abundantly available. There is no severe borrow pressure here, which means there is essentially no immediate threat of a forced short squeeze, no matter how exciting that headline might sound. With a short squeeze effectively off the table, we need to turn to the options market to see exactly where the big players are caging this stock for the week ahead. Looking at the options chain expiring July 2nd, 2026, it reads like a masterclass in market maker positioning. Above the current price sits what I like to call the ceiling. Heavy call resistance begins around $11, with over 2,100 contracts stacked there, building further at $12, and finally hitting a massive, almost impenetrable wall of 5,265 contracts at the $15 strike. Upward momentum is very likely going to slam into a wall around $11, but below the current price sits the floor. There's a strong put support base built around the $8 and $7.50 strikes, holding more than 8,900 contracts combined. In plain English, the big players appear to be locking this stock into a tight cage somewhere between $8 on the downside and $11 on the upside. Taking all of this together, the chaotic fundamentals, the quiet institutional buying, the broken technical picture, and the options cage boxing this stock in, we arrive at the real question everyone watching this video actually wants answered: what is POET genuinely worth right now? Here's the honest, unfiltered truth. As things stand today, POET Technologies is highly speculative and frankly uninvestable for conservative, long-term portfolios. The corporate governance red flags here are simply too serious to ignore. Losing a partner the size of Marvel over an executive's inability to keep a signed agreement is not a small mistake. On top of that, a $1,430 million valuation is completely disconnected from a $503,000 quarterly reality. To justify this price tag, the company needs flawless, near-perfect execution of that $400 million capital raise to actually serialize production at scale. So here's my honest conclusion. Right now, POET is a high-risk trading vehicle. It is not today a fundamental set-it-and-forget-it investment. That said, if you're determined to eventually hold this company for the long haul, there are exactly 3 signals you need to watch before committing real capital. Step 1 is legal clearance. The The June 29th lead plaintiff deadline has just passed, so you'll want to closely monitor the fallout and confirm the company doesn't get hit with catastrophic financial penalties from these lawsuits. Step 2 is execution validation. Poet has stated it expects to fulfill a $5 million integrator order soon, and you genuinely need to see that order land successfully because it's the single clearest proof that their manufacturing can actually scale beyond paper promises. Step 3 is material revenue growth. The company absolutely must show a definitive break from its current $500,000 quarterly revenue trap, until real revenue starts mathematically justifying that enterprise value. Long-term investing in this name is closer to gambling than investing. What would it take for all three of these to line up perfectly inside a single earnings cycle? Theoretically possible? Sure, but the odds of a clean sweep that quickly are genuinely low. But what if you're not playing this for the long term at all? What if you're a trader looking to capitalize on exactly this moment? Because right now, a very specific window appears to have opened. Think about how the catalysts line up. The major event risk, that June 29th lawsuit deadline, has just passed us. At the very same time, we've got serious smart money institutional accumulation from Jane Street forming a real foundation underneath the stock. And finally, we've got that nearly impenetrable $8 options floor defining a clear maximum downside. Stack those three factors together, and it equals what I'd call a compelling post-lawsuit relief bounce opportunity, a short-term, high-risk momentum long setup, valid strictly from June 30th through July 3rd. If you're actually going to take this trade, you cannot afford to guess. You need precision, so here's the exact blueprint. Your entry zone sits between $9.60 and $9.85, looking for consolidation near current levels, supported by a 5-day moving average that's currently flashing a short-term buy signal. Your stop loss needs to be strict, anything below $8.68, using that massive $8 to $9 put options wall we identified earlier as your safety net. If the stock breaks below that level, the thesis is dead, and you exit immediately, no exceptions. Your first take-profit target sits at $10.80, which lines up perfectly with that 50-day moving average acting as resistance. Take some chips off the table here, because remember, the broader trend underneath all of this is still technically a strong sell. Your second take-profit target sits between $11 and $11.15, exactly where that massive call open interest ceiling lives. Expect serious selling pressure right around there and plan to exit the rest of your position. Before you even think about touching your brokerage app, let's be completely clear on the reality of this environment. Everything covered in this video is strictly for educational and analytical purposes only. Nothing here constitutes financial advice or a recommendation to buy or sell any security. I genuinely cannot stress this enough. Poet Technologies is an extremely volatile, high-risk stock, and trading it carries a real risk of severe capital loss. The fact that Jane Street is buying, the options data we walked through, none of it is a guarantee of future price action, and past performance never is either. Please protect your own capital, use real stop losses, and trade with discipline. So, scam in disguise or sleeping giant about to wake up? I'd genuinely love to know where you land. Drop a comment below telling me which of those three signals we covered, the lawsuit outcome, the integrator order, or actual revenue growth, you think Poet is most likely to hit first, and why. If this breakdown gave you real value today, smash that like button. And if you're not already subscribed to Smart Stock Sam, now's the time, because we publish deep dive breakdowns just like this one every single day. And if you genuinely want to support the channel and help us keep producing research this detailed, consider sending a super thanks through YouTube. Every single one means more than you probably realize. Finally, if you're serious about leveling up your investing or trading game, our channel membership is open right now, giving you early access to trade setups like the one we built today, priority replies to your personal questions, and even custom analysis built specifically on stocks you request. Come join the community, and I will catch you in the very next video.